What's up YouTube? Welcome back to Mind Beyond Money. My name is Shane and today we're talking about the perfect portfolio or whether it even exists. So one thing that I've noticed when I started investing was a lot of weird rules that people put out there based on percentage allocation for certain asset classes in your portfolio. I kind of found this a little weird because most of the models modeled it after big billionaire investors or people who've been really successful. And there's nothing wrong with that. Obviously, people want to emulate their success, but there's a big difference between somebody who has, $10,000, $50,000, $200,000, and people who are managing billion-dollar funds or billion-dollar portfolios. So I'd like to stay away from that because there's a lot of discrepancy between a small investor and these big large investors, and following their asset allocation I don't think is the best way to go about it. The best thing I think you can do is probably tailor it to your needs. So by that I mean, what are your goals with money? Are you looking to save up to go to school? Then you probably don't need to have 60 to 70% of your portfolio in equities, right? Like stocks. Are you trying to grow your portfolio really rapidly and you're aiming for 20, 30, 40, 50% gains or something early on in your investing career? Then maybe you do want more equities, right? You got to look at each circumstance for each individual and evaluate what the goals are, right? So if you're heading into retirement, you don't want to have a whole bunch of risk in your portfolio. Another thing that bigger investors don't really consider for small investors is that when you make a real estate deal, it takes up a massive portion of your portfolio right away, especially as a young person that doesn't have a lot of investing capital. Like buying your first home takes up a huge amount of your investment, right? So it's not uncommon for somebody who's under the age of 30 and has bought their first house or maybe their second house even as a rental to have way over 50% of their portfolio in real estate. And obviously that's something that people want to probably diversify a little bit later on in life, but if you're young and you are getting into real estate, chances are that you are going to be taking up a big portion of your portfolio in real estate. The other part of that is that real estate grows much faster as far as the capital or the net worth behind it. So when you make a deal and you're able to buy something that's 10% under market value and you're able to put some money into it, fix things up, and now you're starting to pay down the debt side of it with either your own income or rental income, that asset will far outpace a lot of other assets. I'd like to just share a little bit of my own portfolio, my percentage breakdowns. Just being transparent, I don't suggest anything here. Like obviously you got to do your own research and figure out what you need out of your money and then start allocating it from there. So the first one, just like we talked about, is real estate, and that makes up the biggest portion of my portfolio, way bigger than any other asset class that I own, and that's about 58%. The second one, coming in at about 10%, is cash and fixed income. Fixed income, I mean GICs, bonds, those types of things, and cash at 10%. Obviously, cash is probably one of the safer investments, but it can definitely be outpaced by inflation if you are not careful with where you put it. So I clumped those two together just because most of my accounts for fixed income are with my cash accounts in the same portfolio, I guess. Whereas like my stock brokerage account, there might be a little bit of cash in there as I'm trading or whatever, but usually it's mostly held in securities. And that leads us to our third asset, and that's individual stocks, which makes up about 10% of my portfolio as well. Coming in at about 7% of the portfolio is mutual funds and ETFs. We have both mutual funds and ETFs and other funds just based on where we've been employed, employment matching Those funds were kind of just chosen out for us. We don't really have a lot of say in what goes on there. And then also on the side, I have a little bit of ETFs in my stock brokerage account. So there's a little bit more diversification. That leads to the next one, which is collectibles, which make up about 7% as well. You can see behind me, there's a little bit more of those on display a little bit. I wouldn't say it's like the greatest thing to invest your money in. There's definitely money to be made. If you don't really know it and you don't really enjoy it, then I don't see much point in investing heavily into collectibles. But if there's one that you enjoy, I think it's pretty fun to do. Next one on the list is precious metals, coming in at 7% again. I kind of rounded these numbers just to make them a little simpler, but it's about 7%. And last but not least is crypto, coming in at around 1%. Obviously, probably would have been better off if I had invested more into crypto, but it's something that I don't really understand well enough personally, so I don't like to buy things that I don't understand too well. I've thrown a little bit of money here and there. That position has kind of grown or shrunk over time, just depending on how I felt about it. I've made some money there. It's nothing crazy, I would say, just because of how small of a percentage of my portfolio it takes up. It's nothing that impacts my life tremendously. Now, I know a lot of you out there are heavy into crypto, and that's great. If you understand it and you can make money at it, that's awesome. I don't understand it that well, and I'd rather stick to what I understand. So that basically wraps up my portfolio percentages. Obviously, again, I'm going to restate, do your own research, and slowly shape your portfolio over time. You know, your goals are going to change with money, and so is your portfolio, and so should your portfolio. As you start to get older, you're probably going to taper out your holdings on individual stocks. I mean, maybe if you have a huge portfolio, maybe not so much, but you'll probably taper that out. Riskier investments like penny stocks and things like that, you probably don't want to be like buying and trading while you're in your 70s or something trying to retire. Obviously you can if there's play money or whatever, but you don't want to take a huge percentage of your portfolio and throw it into those things. So at the end of the day, I believe that the perfect portfolio exists, but I do believe that it's different for everyone. So make sure to keep building your knowledge base on different asset types and keep rounding out your portfolio, and you'll find a place you'll find a happy medium where you're really content. You know, maybe you drift more towards stocks, maybe you drift more towards crypto, maybe you go more towards collectibles or antiques. Something that's more in your wheelhouse will help if you're able to generate better returns on a portion of those assets, then it's pretty beneficial. So keep doing more research and learning about different asset classes, and you'll find one that you like. And eventually, over time, you'll shape your portfolio into something that works perfectly for you. Alright guys, that wraps it up for today's video. Make sure to like and subscribe. We'll catch you next time.